Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important macroeconomic and crypto and Bitcoin related news. We will start by looking at what happened on Twitter last week because Michael Saylor and Elon Musk announced together that they had a meeting with North American mining firms, and there is something strange about this. So we are going to analyze this tweet storm and we're going to analyze what's going to happen next. Also, we will take a look at the price of Bitcoin because in the recent weeks we saw the price dropping extremely. After that, we broke out of the downward trend and we moved upward, and after the mention from Michael Saylor and Elon Musk, the price started to rise fast again. And of course, we are really curious about who profited from this dip. Did the weak hands sell their Bitcoin to the strong hands? We will analyze that, of course. And in the end of this video, we will take a look at the chart of Bitcoin and gold. But before we do that, we must dive deeper into the news from the Federal Reserve. They are warning for volatility in the cryptocurrency markets. And they have a big problem because the inflation keeps rising, and we have mentioned this over and over and over again, and now economists are expecting that the interest rates have to rise as well, which could end up defaulting governments, normal citizens, and people who own a lot of houses. So we're going to take a look at that at the end of this video, but for now I'm going to put myself in the right corner of this video, and if you aren't subscribed to the channel yet, make sure to do so. Press the red button down below and click on the bell so you get notified every week when there is a new video online. And these weeks are so important to this, so make sure to do so. We will start by the tweet of Elon Musk. He tweeted that he spoke with the North American Bitcoin miners. They committed to publish current and planned renewable energy usage and ask miners WW to do so. Potentially promising. So now it's promising again, and I told you last week this doesn't make any sense. It doesn't make any sense what Elon Musk thinks about this, but he tweeted again, the market went up again, and we also saw this tweet from Michael Saylor. Yesterday, I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide. And to be honest, from the one perspective, this could be a good thing because miners are going to focus on sustainability, transparency, and on using renewable energy. But from the other hand, a lot of people are saying, yeah, this is not really what decentralism looks like. They shouldn't do any meetings in the, how do you say it, in the back rooms. They should do these meetings openly together with the community. That's what this is all about. But in my honest opinion, this has something to do with great marketing, because we know that Elon Musk is a great marketer. How amazing would it be that Elon Musk bought Bitcoin? He pointed out what he thought wasn't the good thing or what could break Bitcoin, that Bitcoin isn't ESG. And he pointed that out, and afterwards he made Bitcoin the Bitcoin Mining Council, and he promoted the sustainable energy usage and make sure that these miners are only using sustainable energy again. So that's the great marketing case for Elon Musk, but it's also a great marketing case for the mining firms, because I know that a lot of mining firms in North America, even one of the biggest mining firms in the world, is almost mining at 100% renewable energy. So this means that this is a great marketing campaign for them, so they can prove that they are using sustainable energy. So on the one hand, this is great for Elon Musk. On the other hand, this is great for the miners in North America who already mined almost 100% on renewable energy. But on the other part, you can discuss about the fact if this should be what decentralism looks like. Mir says centralization of Bitcoin at closed door is something Bitcoiners don't like. And to be honest, she is really right. So if this is a good thing for Bitcoin, I'm not really sure about that yet. But we have to keep this in mind. And by the way, let me know what you think about this case. Put it down below in the comment section because I'm really curious about your opinion as well. We move to JP Morgan because JP Morgan turned 180 degrees again. Right before Elon Musk tweeted, we found out that JP Morgan had a new true value put on Bitcoin. The true value of Bitcoin was 35,000 after Bitcoin crashed. And JP Morgan was quite positive over the last couple of months. Earlier this year, JP Morgan analysts updated the Bitcoin price target to 130,000 USD. But many supporters of Bitcoin have long argued that Bitcoin is digital gold. However, according to JP Morgan's research last week, institutional investors are swapping Bitcoin, the digital version of gold, for traditional gold. And this is at a time where Bitcoin has fallen to lows of almost half of the price peak, a decline of 50%. So what JP Morgan now says is that the fair value price for Bitcoin would be 35,000 based on the volatility ratio between Bitcoin and gold. So they're now comparing Bitcoin to gold, and gold gives Bitcoin the real value or something like that. But at least this is what they said 2 days ago. It was 2 days ago. Then they published this article. The real value of Bitcoin is 35,000 USD. And then the tweet of Elon Musk happened, and we found out JP Diamond, the CEO of the biggest investment bank in the world, JP Morgan, lifted spirits following his assessment that crypto market could hit a 5 trillion valuation. And to compare that with the current valuation of 1.6, we can do it times 3. So this means that the total cryptocurrency market can do a times 3. And that brings us to the value of, let's say, 3 times 3, 30 times 3, so 90,000 USD again, maybe even a bit more, maybe even 100,000. So that brings us back to the previous approach from JP Morgan, sitting at 130. It was 130. So that brings us almost back to what JP Morgan thought 3 weeks ago. So to be honest, this doesn't make any sense at all. It's almost like Elon Musk. By the way, we know that JP Morgan is helping their clients who are interested in buying cryptocurrencies with the purchase and the storage of their currencies. So this is all about making money, of course. And I'm not sure why they publish so often about what their vision on Bitcoin is. They are not a supporter of cryptocurrencies. They just here to provide services to their clients to make money. If I'm on the chair to say something about this. So we're going to take a look at the Bitcoin Treasuries, because if we want to know what happened when the price of Bitcoin went down, of course we had seen JP Morgan being bearish when the trend was in a downward way, when we saw that the trend went downward, and after the breakout of Bitcoin, they became bullish again. But the real question is, who did profit from this dip? And if we take a look at the Bitcoin Treasuries, we can see that the total amount of, or the total percentage of Bitcoin holders, the big ones, have increased. So these are the publicly traded funds, the privately traded funds, the governments, and the ETF-like products. And if we combine these holdings all together, we're sitting at 7.9 96% right now, a 7.96%. And we were 3 weeks ago still sitting at a 7.84%. So that's an increase of 0.12%. And to be honest, I think that a lot of strong hands took advantage of what has happened in the market. We saw Michael Saylor buying the dip. We saw a lot of big companies openly buying the dip as well. And if we take a look at Bitcoin Treasuries, they took advantage of this dip. And looking at this very interesting analysis from PlanB, the chart you see, in this chart you see what the price level each of the total 18.7 million Bitcoin was last moved. So what happened in May? Okay, let's take a look. Here, these purple blocks are the price levels a lot of people have moved their coins. So the purple ones are from April, the pinkish ones, the turquoise ones are from May. And we see that there is a big difference between, these are almost at the same level, but these and these are not at the same level. So when it comes down to this chart, what happened in May? In May, weak hands sold 1 million Bitcoin at 30 to 35K. So that's this part. This part sold in May. But in April, the month before, they bought around 60K. So that's a staggering 20 billion loss. The good news is these 1 million Bitcoin are in strong hands now. So we know that these coins have moved from the weak hands who bought at 60K to the strong hands who bought at 35K. For example, Michael Saylor. So this is how the market works, and this is why you should not panic about a market collapse. This is what we spoke about last week. Do not panic and hold on. I'm not your financial advisor, but that's what history has told us and what this chart shows us as well. So when looking at the total market cap of all the coins in the cryptocurrency market, we have had a rough time. Looking at Bitcoin, Bitcoin only decreased 13% in the last 7 days. But the alts did way worse. Take a look at Ethereum, take a look at Polkadot, Internet Computer Uniswap, Dogecoin. Those alternative coins dived deeper into the downtrend than Bitcoin did. We know from history and from fractal analysis that if the Bitcoin price increases, the alts are increasing faster, and if the Bitcoin price decreases, the altcoins are decreasing even faster. We know that this happens, but you have always keep in mind that this is what's going to happen when the price goes down. Grayscale Bitcoin premium normalizes after plummeting to a negative 21%. And this is quite an interesting one because Grayscale is an investment firm founded in 2013, and they're the largest crypto asset manager, enabling accredited investors to receive exposure to BTC. So why would they do this? This is because a lot of institutional investors, a lot of big corporations, companies can't get into the market that easily because they have to ask their watchdog, or they have to ask the central bank for permission, and it's way easier to get a permission when it's via a regulated party who manage their holdings, so they don't have to worry about that. However, this convenience usually comes at a price, an annual fee of 2%. So we have the normal price of Bitcoin, and then we have the price at Grayscale, which most of the time sit way higher than it sits on, for example, the exchange. Following the massive growth of the assets under management in late 2020 and early 2021 when it expanded to by more than 10 times in a month. The inflows dried out at the end of the first quarter of this year. So we saw that there was a decline evolving. And if we take a look at this chart, we can see that the price of Bitcoin went up still and then it hit new highs. But after that, the Grayscale came at a discount. Typically, the premium increase when the demand of GBTC is high and vice versa. For instance, it was significantly higher when institutions were accumulating a lot earlier this year. That's what we see over here. And however, it dropped into negative territory when demand decreased, leading to a flow of minus 21.23% a few weeks ago. And now it has normalized again to quite a bit, to minus 3.8, and it's almost at the normal level again. But the question is, could the premium return to positive soon again? So this means that there is more interest from the bigger firms again. According to GBTC's vesting schedule, the majority of institutions will have their positions released by the end of June. So by the end of the second quarter, by receiving access to their previous locked holdings, because their holdings will be locked, they will be able to dispose them accordingly, which could relieve the fund from the downward pressure. So this means that the premium could go up again. And what's good to know about this is that this has not only to do with the demand for the Grayscale fund or for Bitcoin especially. It has to do with the demand for the Grayscale fund because there were 2 new funds evolved in the market, put into the market. We saw a new fund in Europe and a new fund in Canada. So that's why there is also less interest in the Grayscale products and maybe even more interest in the products. Here we see it, Canada, Europe, and several fillings for a Bitcoin ETF in the States. So now there is more supply for the demand that there is. So they don't only have to go through Grayscale to buy Bitcoin anymore. And then we had this important announcement when Bitcoin almost sets at her bottom or even bottomed out already. Dalio told the consensus event that he have some Bitcoin. The billionaire hedge fund boss sees an inflationary future where cash is trash. And we knew that cash is trash already. He spoke about this for years. Cash is worthless. The US dollar is worthless. It's backed by nothing but nothing. And he still doubts, by the way, if governments will tolerate Bitcoin. But he says, I rather have a Bitcoin than a bond in an inflationary scenario. Dalio said during a hour-long conversation with CoinDesk Chief Content Officer Michael J. Casey. And this is, of course, really interesting because he's a billion-dollar hedge fund manager, but he has the right view on the market. He knows that we're in a climate of inflation and that we need to invest in an inflationary asset, or at least an asset that moves together with inflation so you can remain your purchasing power. And the next one is that Dalio joins his fellow billionaire friend Stanley Druckenmiller, who we spoke about, I think it was a year ago already on my Dutch channel, in not only expressing the pessimism about the dollar, but taking a position in Bitcoin. So he's really pessimistic about the dollar, which is of course very logical. Broadly, the traditional finance world has gone from ignoring or shunning to tentatively embracing cryptocurrencies, or especially Bitcoin, some looking to profit from their day to day volatility, others seeking a haven from inflation as governments swelled money supplies during the coronavirus pandemic. So, this has a lot to do with inflation, and we'll discuss this inflation part later on. He spoke about the debt cycle, and we spoke about this last week. If you haven't seen this video about the debt cycle, make sure to do so because we might be in a debt trap. Check out the video from last week. As you look at the budgets and look ahead, we were going to need a lot more money, a lot more debt, he says. And what comes together with debt? More inflation or higher taxation. You need to borrow money, you have to print it. You need more money, so the taxes go up, and that produces dynamic. Now I can keep going on about what happens in that dynamic. It may be capital controls painfully learned in 1971, because in 1971 Paul Volcker had to push the interest rates to 21% to get a normal economy again. But it was really harsh. It was a stagflation scenario, and he said it causes gold, Bitcoin, real estate, everything to go up because it's really going down in dollars. And that's the part of the cycle we are in. I don't agree with him on real estate, but we'll discuss it later on in the end of this video. For now, we're going to take a look at what the Fed has to say about this, because of course the Fed has a reaction against a lot of people moving to Bitcoin. In Yahoo Finance interview, the St. Louis Fed president urges caution, but says most investors go in with eyes open. Bullard admitted that digital currencies that are able to facilitate transactions that are difficult to make in conventional currencies, do have a place alongside fiat currencies. So he believes that there is a place for digital currencies. However, we have a couple of thousand, and these around, and most of them are worthless. And I agree on that. Most of the cryptos, not the cryptocurrencies, but most of the cryptos don't have a fundamental layer to support. I mean, they don't have an intrinsic value. And he's quite right, because a lot of people are going into this market and say, how can I make a fast 10x or a fast 100x? But that's not what this market is about. This market is about what Ray Dalio just said. It is not about getting rich quick. It's about don't getting poor slowly. That's what this market is about. And we want to keep our Bitcoin, because otherwise, if we move it into other assets, then the purchasing value of those assets will decrease. And that's what Tuur de Meester twittered about. Some of you might know him from, I think it was 2011 when he first spoke about Bitcoin, and he hide his profile, so you can't see any tweets from him if you followed him for like a couple of years already. But once you think about selling Bitcoin, you soon realize it implies deciding what to do instead. So if you want to sell your Bitcoin, where are you going to put your money? If you put it in the bank, you will get inflation. So he says, that's where I really struggle, because the straightforward perception for depression investing, what Ray Dalio just spoke about, is to own scarce, globally liquid assets with low counterparty risks. And if you put your money in the bank, you will of course have a counterparty risk, a third party risk. The bank is the biggest risk. Inflation is the biggest risk. You will have taxation when it comes to the bank. And if you want to have something that's globally liquid, then it's not a good idea to move money into real estate. And when doing it with money that's not yours, you can take the step. But what if the value of houses decreases because the interest rates are going to rise again? We have to keep in mind what scenario is next. So if you want to have something that's scarce, that's globally liquid, and has no counterparty risk, you can be your own bank, then it's Bitcoin. And he is completely right about this. Mark van der Scheijs said the same, because if you are sure about the fact that you are willing to have some Bitcoin, then it's quite easy to say, oh, I'm going to diversify and I'm going to do some altcoins as well, because that's what we usually do. We are diversifying when we're moving into stocks or when we're moving into bonds. We are always diversifying. But when it comes to Bitcoin and the crypto market, it's not always a good idea. In BTC sell-off, it's always good to look at altcoins. We just looked at the altcoins. The altcoins dumped faster, deeper than Bitcoin did. If they are doing much worse, it's just fear-based selling. That's what's happening right now. Even the bigger altcoins are down 30-40% today. That's why I'm in Bitcoin only. You'll sleep much better and you know it's just temporary. So we know the altcoins are just temporary, moving up again. I'm from the age that we knew about Feathercoin, Namecoin, and Peercoin, and nobody talks about them anymore. So just keep that in mind. Doge is the only one that survived, or at least survived a bit. And then we had this article released last week. The European Central Bank published a new report on financial stability of the European Union. And they also mentioned the crypto assets. They said that there was a lot of excitement about crypto assets and that they found it potentially concerning, but that the financial risks were limited. But they also said that one of the main issues of Bitcoin and cryptocurrencies was their volatility and their speculative nature, and they compared it to the Tulip mania. In Holland, we had an article published from the Dutch Central Bank, and the Dutch Central Bank said that if you compare the Tulip mania to the cryptocurrency mania, when looking at the Tulip mania, you at least have a tulip. So that's the level of, I don't know, it just doesn't make sense again. I don't know. It's completely nuts. I mean, when looking at volatility, yeah, the market was really volatile over the last couple of weeks. But to me, it's a good thing because the Bitcoin market is volatile, because it's the only real free market left. If the Nasdaq becomes too volatile, they will stop trading. In this case, volatility isn't a bad thing at all. Let that sink. That's the important fact about this. Okay, we're going back to the central banking again, because Indonesia is planning to start their own central bank digital currency as well. It's planning ahead to speed up payments, and in Indonesia, payments via banking are really terrible. It's really terrible over there. They often use online banking systems, just like they do in China, by the way. But the cryptocurrency payment methods are banned. But they will take a look at the digital aspect. And then we had this one, and we spoke about this before, where to put your money if you don't choose for Bitcoin. And Jesse Fowler had the following quote from an article in Bloomberg. For the first time in years, the global supply of debt with a negative yield. So you will get, for example, a mortgage, and you will get extra money for that mortgage, but in this case it's mostly government bonds, is in a meaningful decline. It signals higher borrowing costs on the way for everyone, from governments to corporations to homeowners. So maybe the interest rates, the cost of borrowing, the interest rates are going to increase, not only for governments, corporations, but also for homeowners. And I also found this one, also from Bloomberg, and Morgan Stanley's Gorman sees Fed raising interest rates in early 2022. My personal view is what he says is that rates are likely to raise in early part of next year, so 2022, and not in 2023, which is currently the projection. And then we have this article suggesting the following: investors buying real estate to beat inflation may find tactic backfires. And that's why I don't agree with Ray Dalio on having an inflational scenario for housing prices, because when it comes to housing prices, it's not only about supply and demand, it's also about the interest rates. If the interest rates are really low, it's really easy to borrow money. But if the interest rates are really high, people can't buy houses that easily. So the price will go down eventually. And that's what that's why this real estate market is so interesting. And residential real estate has proven to be a haven during inflationary periods in the past. Stanford University economist Monica studied US inflation from 1970s and found that home prices rose relative to the size of the economy, while stock prices fell, meaning that homeowners became richer compared to stock owners. If inflation were to stick around, exactly the same thing will pay out, is what she said. But owners of residential and commercial real estate are often better off during times of rapid inflation than owners of stocks and bonds, economist says. But landlords who are unable to raise rents can suffer during periods of inflation. So if you are a landlord and you are trying to rent out the house you've bought, but you can't increase the monthly payments, then your income won't increase with the inflation. So the price of your house might increase, besides the fact that the interest rates can increase as well. But you can't increase your rent. And that's what we spoke about when it came to the restaurant owner who had a job and wanted to have a new employee, but the employees, or at least most of them, said, I'm not going to apply for the job because the salary is too low. And then there was another professor who had studied in the 1980s, and he found out that the property sector didn't work well as a hedge when vacancies were high. And this, combined to the story of the restaurant, is really interesting again. If there is a lot of vacancies at margin, landlords lose their bargaining power. And in the end of this article, they mention real estate is basically a bond with equity upside. I'd rather be in a 2-year bond than in a 10-year bond if rates are rising. So if rates are rising again, then we will have to deal with the fact that a lot of people can't buy houses anymore. But if we stay in this inflationary scenario, then it's going to be still quite interesting. So the fact that we have seen prices increasing of real estate during inflation, but also during the last couple of years, doesn't mean it will always stay that way. So it's really hard to know what will happen next in a scenario that we haven't seen before. We never thought we might see negative interest rates, which is the world upside down. But we have to keep an eye on how the evolvement of these products will be, of these assets will be, and we will stay close on this subject. We're going to take a look at the market. We're going to do some technical analysis, which is one of my favorite things to do. We saw gold moving in a downward trend, or at least moving out of this downward trend. We mentioned this in the first video that I put on this channel. I told you that we had this double bottom, which we broke out. We had this head and shoulders pattern, and we are right now sitting at almost the top. We almost hit the target point, and this is why I love technical analysis. For me, technical analysis is just a handle. It's not a typical science, but it gives you the opportunity to move together with the market. And we just hit the target point. Then the question is where we will make the next leg before you can go upwards again, but this looks quite good, and we're still on our way until 19,000, and then we have to consolidate around this level between, let's say, 1816 and 19.3 or so, before we can build enough momentum to go upward again. We only have to keep in mind that we might see some negative divergence. We're not seeing it right now, but maybe on the 4-hour we've already had some negative divergence, which didn't work out really negative. We only saw this spike downward, but we're still in this upward trend. I will expand it a little bit, and to me it still looks great. So this is not a selling point yet, but if we break out of this upward trend, it would be on the short term. So then we're going to take a look at Bitcoin. Bitcoin had the same breakout as gold. I will show you on the 1-hour chart. We've had this downward trend, and it almost looks the same like we had on the gold chart, and that's why it's so interesting. I will zoom out on this chart. Here we have this downward trend for gold, then we have this downward trend for Bitcoin. We had a head and shoulder pattern over here. We hit the head and shoulder target point. This comes from over here. We had this price level. We hit this target point. We almost hit the target point. Then we went down in this downward trend. And for now, it's a question where this will bring us. I will go a little bit closer into detail. So this is what it looks like right now. We're in this downward trend. It's not looking really pretty, I'm sorry, but we're sitting on this level, this area. And it looks quite nice. I think we're now at the top of the downward trend, so we can move back downwards, back to this level again, 36 again. And what will be great is if we test this level. So the old resistance line will become a new support line. We've seen this with gold as well. I will zoom in so I can show you what happened with gold and Bitcoin. We broke out and then we tested the bottom again, in which the old resistance became a new support line. And if we draw this, I hope I can do this really quick. I'm sorry, I can't draw the parallel, but you can see what happened here. Of course, it's a bit different than on the gold chart, but still it doesn't make any sense if we fall back until 35k. We have had a tweet of PlanB talking about what happened with Bitcoin. We've seen that the price of Bitcoin went down quite a bit, and he said we can't be around the 30 or the 32 level for too long. It's not a bad thing if we stay there for a couple of weeks, but we don't want to stay there for, let's say, 2 months or so. Then the model might break. So for now, we're sitting at 37, which is actually quite good. There is a big fight going on over here to see if we can break out upward again. If we break out downward, we might see some new lows. 35 is a really strong support line, by the way, and we have another strong support line over here, which is the downward trend. So for now, we're going to watch these lines. I don't have a specific target point. If we break out on this one, I can calculate the possible target price, which will be around this level. If we break out downward, then we would end up here, almost at the 35. And if we break out upward, we're gonna end here, which was the last resistance level of 39. So for now, it's looking fine. I'm not in a panic. I'm not scared or so. I'm not really bullish. It's looking good. And we're going to watch this downward trend until the trend ends. So for now, I would really like to thank you for watching. I've had a lot of questions from you guys about where I'm trading and what exchanges I like, how I diversify my portfolio, I would suggest to go down to the link below. Click on the first link you see so you can check out all the platforms I work with and I like. And for now, I would really like to thank you for watching. Also, make sure to follow me on Twitter and Instagram so you get notified when there is news or when there are some things you need to know. You will find them here, there, in the, sorry, it's quite hard because I'm doing the opposite. So it's over there in the lower band. And for now, I would really like to thank you. And I hope to see you next week again with a new Madelon Talks. Bye bye and have a good week.